You already paid the input tax 200, but now you are supposed to pay 500 rupees of output tax. So what you will do, you are going to set off this 200 against 500, you will be paying only 300 rupees. For other states, the turnover should be less than 1.5 crore. For northeast states, it is less than 75 lakh to opt composition levy. We will be considering the tax applicable on cell phone because cell phone will be considered as principal supply. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence, MYSURU. Dear students, welcome to this session 2 on unit number 2, that is definitions with respect to GST. So dear students, in the earlier session we discussed different definitions and we got to know the meaning of the different terminologies with respect to GST. So in this session also we'll be continuing to know about the different definitions with respect to the concept GST. So the next definition is input tax. So input tax has been defined under GST law. Input tax in relation to taxable person means IGST and CGST in respect of CGST Act and IGST and SGST in respect of SGST Act charged on any supply of goods or services to him which are used or intended to be used in the course or furtherance of the business and includes the tax payable under subsection 3 of section 7. So input tax is nothing but it is a tax paid on inputs purchased. Again, what is inputs? Inputs are nothing but the required raw materials to convert into a finished goods or to a manufacture a finished goods. So whatever you are purchasing, on that you are going to pay the tax. That tax is called input tax. So you can set off the input tax against different taxes. So you can set off your SGST. You can set off SGST against SGST and IGST. Okay. Next, you can set off your CGST against CGST and IGST. Okay. So you can set off your input tax with respect to SGST against SGST and IGST, and you can set off your input tax of CGST against CGST and IGST against IGST. So input tax is nothing but the tax paid on inputs purchased for the furtherance of the business, and you can set off your CGST against CGST and IGST, and you can set off your SGST against SGST and IGST. And what is this input tax credit? So input tax credit is the tax paid by the buyer on purchase of goods or services. Yes, input tax credit is the tax paid by the buyer on purchase of goods and services. Such tax which is paid at the price or at the purchase when reduced from liability payable on outward supplies is known as input tax credit. That means whatever the input tax you have already paid at the time of purchasing of your products or the raw materials, you are going to reduce the tax burden at the time of paying the output tax by deducting whatever the input tax paid at the time of purchasing. In other words, input tax credit is tax reduced from output tax payable on account of sales. That means whatever the input tax you have paid. For example, if you have paid the input tax of rupees 200 on purchase of material, and if you need to pay like 500 rupees of output tax. So what you are going to do? You already paid the input tax 200, but now you are supposed to pay 500 rupees of output tax. So what you will do? You are going to set off this 200 against 500, you will be paying only 300 rupees. This is called input tax credit system or the mechanism. It's nothing but you are going to set off the input tax paid against the output tax payable. That is called input tax credit. Moving further, intrastate supply of goods. Intrastate supply of goods. Intrastate supply of goods or services is when the location of supplier and the place of supply. Location of the supplier and the place of supply, that is the location of the buyer, are in the same state. The location of the supplier and the buyer of the product, if they are in the same state, that is called intrastate supply of goods. In intrastate transaction, a seller has to collect both CGST and SGST. Yes, if it is an intrastate sales, if it is an intrastate supply, that means if the transaction is happening within the state, if the buyer and seller both are in the same state, then the supplier is supposed to collect both CGST and SGST from the buyer. Yes, who is purchasing the product, from that person, the supplier is supposed to collect the CGST and SGST. The CGST gets deposited with the central government and SGST gets deposited with the state government. Yes, here intrastate supply is nothing but the transaction happening within the state. That means the buyer and seller are going to be in the same state. In that scenario, the supplier is supposed to collect CGST and SGST, both the tax, and CGST goes to central government and SGST goes to state government. For example, Mr. Raj of Mumbai, Maharashtra sells 10 TV sets to Mr. Vijay of Nagpur, Maharashtra. So here you can see Mr. Raj is selling TV to Mr. Vijay, but both are in the same state, but they are in different districts, but they are in same state of Maharashtra. The buyer as well as the seller both are in Maharashtra. So this is an example for intrastate supply. The place of supply is Nagpur in Maharashtra. Since it is the same state, CGST and SGST will be charged. Yes, both the buyer as well as the seller both are in the same state. So that is why CGST and SGST is applicable, and CGST goes to central government and SGST tax goes to state government. Next one, job work. So what is this job work? Section 2 subsection 68 of the CGST Act defines job work as, job work means any treatment or process undertaken by a person on goods belonging to another registered person, and the expression job worker shall be constructed accordingly. That means one person will be taking a charge, or the one person is going for any treatment or process of the goods belongs to other person. For example, I am the owner of the product. What I will do, I am going to give the product for the modification for the third party. Okay, to modify the product, I am going to give that product to the third party. That third party is called job worker. After modifying the goods, what he will do is going to return it back to the actual owner, that is for me only. Okay, here I am not selling, just I am giving that product to the third party to modify it, to process it, to treat that product. So after the completion of the modification, that third party is going to return back the product to me itself. So that is why it is called job work. Okay, the third party or the another party is going to treat or process the product of the other different parties. Then after the modification is going to return the product to the actual owner. That is called job work. Next thing, it is invoice. So what is this invoice? So we all know what is invoice. If you go for a shopping, if you go for any hotels, if you go for any kind of malls and all, if you order some goods through online, obviously you get the bill. That bill is called the invoice. In invoice you can see all the details with respect to a goods. What is the price, on what date you purchased, what is the expiry date, what is the discount given, what is the actual cost, what is the tax imposed on that particular product, who is the particular seller, who is the buyer, the address of the seller, address of the buyer. Every information will be there in the invoice. So in GST, invoice is a bill. Invoice is a bill or receipt of items sent or services that a seller or service provider offers to a customer. Yes, it is a invoice or the bill or receipt of items sent, receipt or the bill of items sent or services that a seller or service provider offers to a customer. What is it called? Invoice is called, invoice is a bill or a receipt of items sent to the buyer. That is called the invoice. And it specifically lists out of the services, products along with the total amount due. One can check a GST invoice to determine said product or services prices before CGST and SGST are levied on them. A GST invoice bill also displays the amount of taxes charged on each product or services which an individual purchases from the seller or provider. Yes, as I said, GST invoice is going to be a bill or a receipt which shows the items which are purchased by the recipient, and the recipient, that is the buyer, will get to know what is the cost of the product before imposing the GST and what is the total tax he is paying and he is supposed to payable and what is the total value of the bill. Everything will be mentioned in the invoice. So that is why we are going to call it as invoice. Next one, composition levy. So what is this composition levy? So composition levy is all about a taxpayer whose turnover is below 1.5 crore can opt for composition scheme. Yes, composition scheme is mainly for small business entities. It is mainly for small business entities. If you are running a small business entity, then you can opt for composition scheme. So what are the benefits we are going to get? If the turnover of any business entity is less than 1.5 crore, they can opt for composition levy scheme. And in case of northeastern states, the turnover limit is less than 75 lakh. For other states, the turnover should be less than 1.5 crore. For northeast states, it is less than 75 lakh to opt composition levy. So what are the benefits we are going to get? As per the GST, as per the CGST Amendment Act 2018, a composition dealer can also supply services to an extent of 10% of turnover or 5 lakhs, whichever is higher. That means earlier to 2018, the composition levy scheme is applicable only on supply of goods. But after the amendment from 2018, the composition levy scheme can be opted by even by the service providers, where the total service provided should not be more than 10% of the turnover. And this amendment will be applicable from the 1st of Feb 2019. Further, GST Council in its 32nd meeting proposed an increase to this limit for service providers on 10th Jan 2019. So the turnover of all businesses registered with the same PAN should be taken into consideration to calculate the turnover. Yes, here mainly for composition levy scheme, the turnover should be less than 1.5 crore and for northeast states it is 75 lakh. So they can opt for composition levy scheme. So what is the benefit they are going to get if they opt for composition levy scheme? So before that, who cannot opt for composition scheme? Who cannot opt for composition scheme? Manufacturer of ice cream, pan masala or tobacco. The manufacturer of ice cream, pan masala and tobacco, even though their turnover is less than 1.5 crore, a person making interstate supplies. Yes, a person making interstate supplies. That means the supply between two states, he can also not opt for composition levy scheme. And a casual taxable person or non-resident taxable person. Yes, if he is not a resident, if he is a non-resident, then he can't also opt for composition levy scheme. Next, businesses which supply goods through an e-commerce operator. If any businesses is supplying the goods through e-commerce operator, like for example through Flipkart or through Amazon, they can also can't apply or they can't opt for composition levy scheme. So these people can't opt for composition levy scheme even though their turnover is less than 1.5 crore. Next, conditions for availing composition scheme. So what are the conditions we have? The first condition is no input tax credit can be claimed by a dealer opting for composition scheme. That means if you are opting for composition scheme, then you will not be allowed to claim input tax credit. If you are opting for composition levy scheme, you are not supposed to claim input tax credit. Next, the dealer cannot supply goods not taxable under GST such as alcohol. Yes, the dealer, if he is opting for composition levy scheme, he can't supply the goods which will not comes under the GST. Example, alcohol. Petrol will also not comes. So he is not supposed to supply alcohol or other goods which will not comes under the GST purview. And the taxpayer has to pay tax at normal rates for transactions under the revenue charge mechanism. Yes, the taxpayer has to pay the tax at normal rates for transactions under the reverse charge mechanism. In case if he is purchasing the goods on reverse charge mechanism basis, on that the normal GST is applicable. He is not allowed to opt for, or is not allowed to calculate the tax payable based on composition scheme. He can calculate the tax payable on composition scheme if he is purchasing it from a registered dealer. If it is on reverse charge basis, the actual GST is applicable. So in composition levy scheme, the people who are earning total turnover is less than 1.5 crore, they were going to get benefited in tax rates, because they will be imposing the flat rate of 2% or 5% of tax. They will not be imposing 5, 12, 18, 28. So for composition levy scheme, for small business entities, the tax rate will be 2% or 5% based upon what kind of transactions they are doing. So that is why if they are small business entities, they should have to opt for composition levy scheme, where they'll get more benefits while paying the tax to the government. Next one, composite supply. That is composition scheme or composition levy earlier, but this is composite supply. What is this composite supply? If it involves more than one goods and services which are naturally bundled together, they are referred to as composite supplies of goods or services. It shall be deemed to be a supply for those goods or services which constitutes the principal supply. That means few goods or services are naturally bundled. Few goods or services are naturally bundled, where a particular good or particular product will be considered as principal supply. A particular product will be considered as principal supply. That means the goods are naturally bundled. For example, a cell phone. For example, cell phone. In cell phone, they will be giving you the cell phone and a charger and a earphone. In that, cell phone is going to be the principal supply, right? In a cell phone box, they will be giving you cell phone, charger and earphone. In that, cell phone is going to be the principal supply. That is called composite supply. The example is where goods are packed and transported within insurance. The supply of goods, packing materials, transport and insurance is a composite supply, and supply of goods is the principal supply. This implies that the supply will be taxed only as supply of goods. Yes, here along with the goods, if you are adding the packing materials and insurance charges and all, supply of goods will be the principal supply, and packing and insurance, that will also includes to the supply of goods, and we will be computing the tax on the total value. Another example is again the cell phone. So cell phone, in the pack you will be having cell phone, in the box you will be having cell phone, and you will be having charger, you will be having charger, and you will be having earphone. Okay. So let us assume these three are bundled together and sold for a single price, and cell phone attracts 18% GST and charger attracts 12% GST and earphone attracts 28% GST. So at that point of time, what we will do, we will be considering the tax applicable on cell phone. because cell phone will be considered as principal supply. Cell phone will be considered as principal supply. So here we are supposed to consider the tax rate of the principal supply for all other products. If you are purchasing a cell phone in a bundle along with the charger and the earphone, then you are supposed to impose the tax of cell phone, whatever the tax applicable on cell phone, on charger as well as on earphone or earphone. Okay, so this is how we are supposed to treat the composite supply. Next one, mixed supply. If it involves a supply of more than one goods and or service which are not naturally bundled. Here, which are not naturally bundled is nothing but they are not depending on each other. In natural supply or in a particular composite supply, there the goods are depending on each other, but in mixed supply, goods are independent, they are not depending on each other. So here, the goods which are not naturally bundled together, these are referred to as mixed supply of goods or services. It shall be deemed to be a supply of that goods or services therein which are liable to tax at the highest rate of tax. So here goods are bundled together, but they are not depending on each other. At that point of time, we are going to impose the highest rate of tax. Example is, you are going to purchase toothbrush. Okay, you are going to purchase toothbrush. So on toothbrush, what is the tax applicable? It is 18%. Okay, tax applicable is 18%. And we also purchased toothpaste. The tax rate is 12%. So these two are not depending on each other. You can purchase the toothpaste whenever you want. You can purchase the toothbrush whenever you want. You need not to purchase it together, but still you are purchasing it together. So it is independent, not dependent. So at that point of time, if you are purchasing together, which tax is applicable? The highest rate of 18% is applicable on both toothbrush as well as on toothpaste, because it is not naturally bundled and it is not depending on each other. This is how we are supposed to treat under mixed supply. Next one, outward supply. So what is this outward supply? Outward supply in relation to a person shall means supply of goods or services, whether by sale, transfer, barter, exchange, license, rental, lease, disposal or any other means made by agreed to be made by such person in the course of furtherance of business. So outward supply is nothing but in relation to a person shall means of supply of goods. So you are going to agree to supply of goods or any services through licensing or through selling the product or through renting the product or by transferring by barter system. You are going to agree that you are going to supply the goods, that is called outward supply. That means you are supplying the goods to third party or to someone else. That is called supply of goods or outward supply of goods. Next one, person. So what is this person? Person is nothing but the person who is liable to pay GST or who is going to pay something to the GST authority, like something in the form of penalty or interest. The person who is liable to pay GST or any other sum of money in the form of penalty or interest, that person is going to call person. And this word person includes individual, HUF, company, firm, and AOP, that is association of person, or BOI, body of individual, or any corporation or government company, body of corporate incorporated under laws of foreign country, and cooperative society, local authority, government, trust, artificial judicial person. So these all people includes under the word person. So moving further, next one is turnover in state. So what is this turnover in state? Turnover in state, section 2 subsection 112, that is 112 of CGST Act. Turnover in state or turnover in union territory means the aggregate value of all taxable supplies. Yes, turnover in state is nothing but the aggregate value of all the supplies is called turnover in state. Which tax is payable by a person on reverse charge basis, that is excluding. Okay, we are supposed to exclude the value of inward supplies on which the tax is payable on reverse charge basis. If the tax is payable on reverse charge basis, we are not supposed to include that to compute the turnover. Okay. So the total turnover for a particular duration is called the total turnover except the tax payable on reverse charge basis. And exempt supplies made within a state or union territory by a taxable person, exports of goods or services or both, or interstate supplies of goods or services or both made from the state or union territory by said taxable person but excludes central tax, state tax, union territory tax and integrated tax and cess. So here except the tax payable on reverse charge basis and except the tax payable, that is CGST, SGST, IGST and UTGST and also cess, and other all items are supposed to be added to compute the turnover in state. That is the meaning of turnover in state in section 2 subsection 112 of CGST Act 2017. So with this, I hope all of you understood the different meanings which comes under the GST Act. So with this, I'll wind up the session. We'll meet in the upcoming sessions. Until then, thank you all. Have a nice day. Namaste.